How many of you are from the QIP? Separately only from QIP? Okay, fine. Others are my foundation batch students only. As far as my foundation batch students are concerned, most of it is going to be kind of revision for you. Except the fact that wherever relevant, I will be integrating the current affairs. This is as far as the foundation batch students are concerned. जो बाहर से आए हैं उनके लिए सब कुछ नया है, ठीक है? हाँ. Yes, good afternoon everyone. Good afternoon. Yes. So at the outset, I'd like to welcome you all to the prelims revision classes, right? So before I start with the revision classes, let me tell you as to what is the agenda and approach of this revision classes and how these revision classes will help you to crack the upcoming prelims examination, right? This is what I'm going to discuss in the next 5 minutes and then we'll start the discussion. So here, with respect to prelims revision classes, based upon my interaction with the students who have been preparing for the prelims examination, you know, students are facing multiple problems just before the prelims examination. Problem number 1 is, I'm pretty sure most of you are studying extremely hard throughout the year, where you are studying the static part as well as the current affairs. When it comes to current affairs, you are studying current affairs from, let's say, Focus or let's say DNS. The problem which occurs is just 2 months before the examination, whatever you have studied in the last 1 to 1.5 years, that you have to consolidate. That becomes your biggest challenge when it comes to the prelims classes. That is your first problem. Problem number 2 is, even though you may have covered the static part, the foundation part, there might be some topics where even today you might be facing difficulties. Now take for example, in the field of economy, no matter how many times I must have explained the concept of yield rate, there will always be doubts with respect to yield rates. I'm pretty sure you're now also you're having the doubts with respect to yield rates, right? Same way, some people might not be able to understand the concept of difficult concepts such as the concept of NER, nominal effect to exchange rate, or real effect to exchange rate. Getting this point? Third problem is, you have studied the static part, you have studied the current affairs, but then when you're going to attempt the prelims examination or the mock test that you normally attempt, generally you have found yourself to be committing mistakes repeatedly. And sometimes the mistakes could be very silly mistakes, where for example one particular topic or one chapter of RBI, you are failing to link it to the another chapter. For example, the chapter of monetary policy, you might not be able to link it to the chapter of external sector, right? That is where you must have been committing mistakes. So keeping in mind these 3 problems which generally students face, we have this particular revision classes. Is that clear? So let me just tell you as to how these revision classes are going to be different from your foundation classes, right? And as far as other students are concerned, how I will be approaching this. So here in the revision classes, my focus would be on 5 things, as you can see. Number 1 is identifying important topics, revision of static part. Yeah, can you just help me with this, Divansh? Okay, is that okay? Fine. So you can look at the 5 parts in the revision classes: identifying important topics, revision of static part, current affairs, integrating current affairs, solving tricky MCQs, and then dot solving. Let me just explain these points one by one, starting with identifying important topics. So we all know that especially economy is extremely vast. There are almost like 20 chapters which you'll have to study as far as economy is concerned. Within each chapter, which topics are important? Which topics are not important? How will you identify that? Because you'll end up studying each and everything which is there for the syllabus. For that, what I have done is, whenever I'm going to start a particular chapter, I'm going to carry out this kind of analysis to make you understand the relevance of that particular chapter, and within the chapter, what topics are actually more important. Can you see this? This is a chapter of monetary policy. Based upon the analysis of previous year questions, I will show you what is the relevance of the particular chapter. Can you see every year how many questions are generally expected from the chapter of monetary policy? 2 to 3 questions. But can I say just knowing how many questions are asked, that alone is not sufficient. What is also equally important is nature of questions. So what I have done, I have shown you the breakup of the nature of questions from the chapter of monetary policy. Can you see from the chapter of monetary policy, from where are the questions generally asked? 1, 2, 3, 4, 5. Did you get the point? For example, direct questions are asked from monetary policy tools. This is what we know. There are different types of monetary policy tools. In fact, are you able to recall Prelims 2023? There was a direct question from monetary policy tool. Which was that? Open market operations, sterilization operations. It was a direct question in Prelims 2023 there, right? So, based upon the analysis of PYQs, you'll get to know what kind of questions are going to be asked. So, this is the first thing which we'll be doing. Then revision of static part. In the revision of static part, so you must understand that the entire static part is very difficult to cover in 10 to 12 classes. So what I will be doing is, only the important ones I will be focusing more on. Now for example, let's say we are discussing a chapter of monetary policy. In the foundation classes, in the monetary policy, let's say I have discussed the topic of repo rate, reverse repo rate. I might have taken 1 hour to discuss that. Now we don't have too much of time to discuss about the repo. So that repo topic I'll discuss through MCQs, multiple choice questions. But within the static part itself, I'm pretty sure there are some topics where even now you might not have the necessary clarity. Take for an example, in the static part, this is something which is very difficult for most of people to understand. ये आपका favorite topic है. What is that? Yield rate, bond yields. So you know how does the bond yield increase or decrease? So this is a kind of mind map which I have prepared, which we'll discuss in the class. Is that clear? Apart from that, I have also integrated the current affairs into the static part. Let me just give an example of how current affairs have got integrated into static part. For example, in the chapter of monetary policy, remember, all of you know the concept of monetary policy transmission. It is very simple. Monetary policy transmission means RBI changes the repo rate. Because RBI changes the repo rate, the money supply in the economy increases or decreases. This is what we know as monetary policy transmission. That is what we have covered in the static part. But there are some developments which have taken place with respect to monetary policy transmission in the last 1 to 1.5 years. Let me just show you those developments. Can you see? What I have done, this is the topic of monetary policy transmission. Last 2 to 3 years, with respect to monetary policy transmission, what all things are in news, not just in the Hindu newspaper, but across multiple newspapers. Can you see here? ET stands for Economic Times, Money Control, Mint, as well as Express. All of these topics are in news in last 2 to 3 years with respect to monetary policy transmission. Did you get the point? Can you see there is one topic on which you can actually expect question. and on which normally you don't find the content in the textbooks. क्या है यहाँ पे? Liquidity deficit, banking liquidity deficit and surplus. What is that? And how is that affecting the economy? Same way, there is a concept of net interest margin. Can you just recall previous year question, almost a similar concept of interest coverage ratio. Interest coverage ratio was in news, and that is why you have a similar concept of net interest margin. I hope you are getting this point. Same way, you can see you have this credit deposit ratio. There are some ratios in economy which is actually very difficult to understand. Now, for example, can you see how many ratios we have? You have cash deposit ratio, currency deposit ratio, credit deposit ratio, and investment deposit ratio. Do you get the point here? I'm pretty sure this is not something which you might have studied in your foundation. This is completely different. So foundation we covered on the static part, very core part. Now we are taking you to the next level. Next level is where the value addition takes place. I hope I have made myself very clear in this, right? Okay. Okay. Then we will solve, यहाँ पे मैंने लिखा है tricky MCQs. This is what I'm focused on. For example, let's say there's a particular topic. On one particular topic, we'll have at least around 4 to 5 MCQs that we'll be solving right in the class. For example, you have this topic of CBDC, Central Bank Digital Currency. Have you seen a question already asked in Prelims 2023? Can you tell me what are the recent developments in CBDC? Any recent developments in last 2 to 3 months? Online students? Any recent development has taken place in CBDC? Number one, RBI has introduced, yeah? Come again? UPI. Yeah, one they have linked to UPI, and then they have introduced the concept of programmability in CBDC. CBDC has now been made programmable. CBDC can also be used in offline mode. So based upon that, I have taken up at least 4 to 8 questions on the topic of CBDC itself. Is that clear? And the last part is obviously the doubt solving. But because there are so many students in the offline class as well as online class, it is very difficult to take the doubts while I'm discussing a particular concept. What I will do, whatever doubts you have, all of your doubts, I will be discussing at the end of the class. Is that okay? Okay. So let's start with the first one now. So we will be starting with the chapter of RBI in the first class. Okay. It's not possible for me to share the screen because it's not on Zoom actually. So probably from tomorrow we'll be able to share the screen. Is that okay? Yes. Okay, thank you. Okay, so we'll be starting with the chapter of RBI. Okay. Now, what I want you to do is, since this is the first class, that is not a problem. But from tomorrow, what I will do is whatever topics we have covered in the class, that topic you go back and revise from the PPTs which will be shared with you. Apart from that, I will also tell you what topics we'll be covering in next day's class. Please prepare for those topics and come, because it becomes easier for me also, it becomes easier for you also, so that we can actually complete the syllabus faster. Is that clear? So because it's a first class, we will be starting with the chapter of RBI. Once you go back home, cover this entire chapter of RBI, and then tomorrow's class, be prepared for the next chapter, that is chapter of monetary policy. Is that clear, everyone? Okay. So let's start with the chapter of RBI. Okay. Let's have a look at the importance of the chapter of RBI. In last 10 years, approximately around 12 to 13 questions have been asked from the chapter of RBI. 12 to 13. In particular, if you see last 5 years, on an average, even though it might vary, on an average, you have around 1 to 3 questions from the chapter of RBI. Is that clear? Now, here, from the chapter of RBI, what is being asked repeatedly? Let's focus on that. Can you see here? From the chapter of RBI, what kind of questions are asked? Mainly 2 types of questions are asked from the chapter of RBI. One is role of RBI, and the second one is the current developments in RBI. Let's quickly have a look at the PYQs from the chapter of RBI so that you get to know about it. Okay. 1, 2, 3. There are 3 PYQs on the chapter of RBI. That is role of RBI as bankers bank, role of RBI as a regulator, role of RBI as lender of last resort. Is that clear? Okay. Now what can you learn from these 3 questions that you can see? It is very easy to see that all of these questions are asked on one dimension of RBI, that is role of RBI. But if you just know the role of RBI, is it sufficient? No. Because most of the students know that RBI is a regulator, RBI is a banker to banks, and RBI is also a lender of last resort. But if I just know that RBI is a lender of last resort, is that sufficient? No. Because as a lender of last resort, you also need to know whom does the RBI lend to. And what people normally think is, as a lender of last resort, RBI lends money to banks also as well as governments also. This is what people think. So when the question was asked in 2021, most of the students marked the answer as 2 and 3. But it's not 2 and 3. Rather, what is the right answer? 2 only. Because as a lender of last resort, RBI is lending money only to the banks. What can you learn? A very simple thing what you can learn is, I showed you repeatedly questions are asked from role of RBI. So if you just know role of RBI as a banker to the banks, that is not sufficient. As a banker to banks, what functions does the RBI perform? That is also equally important. Is that clear? Okay. Look at this question. Role of RBI as a debt manager. Apart from that, once again, role of RBI as a debt manager. Can you see? Role of RBI as a regulator of banks, role of RBI as a lender of last resort, role of RBI as a banker to bank, role of RBI as a debt manager. Twice questions have been asked. And then you have this question about objective of RBI, which is a very simple question. And then question have been asked with respect to development role of RBI. Like one of the development role of the RBI is to promote financial inclusion. Financial inclusion, there is lead bank scheme, and then there is service area approach. I hope you are clear, everyone. Okay. With respect to current developments, what questions have been asked? Let me just tell you. You can see this is a question on current development of RBI, which is on structure of RBI. What question has been asked here? Can you see 1, 2, 3 statements? These 3 statements are actually related to your static part. But why did I put it in current affairs? The reason is simple. It is a conceptual question, but motivated from where? Current developments. For example, can you see governor? Was office of governor anytime in news during the same time? Office of governor was in news during this time because around 2018, Mr. Urjit Patel resigned. So it is inspired from current affairs. Getting this point? Same way, that is inspired from where? Demonetization. This is inspired from inflation. I hope you must be knowing, in the year 2022, Indian economy was facing very high rate of inflation. During that time, it was being proposed that the the RBI should issue what is called as inflation index bonds. Clear with this? You can see this also. RBI's data localization norms. You know the payment and settlement system in India, which basically includes your phone pay, GPay, MasterCard, Visa. What is common to all of this? They are basically foreign players. Now, what they used to do earlier is whatever data they used to collect from us, that data they used to store it in servers located outside India. So then RBI came up with data localization norms, which mandated that the data should be stored in the servers physically located in India. Can you see it's a current development? I hope it's clear. Okay, based upon that, let's start our discussion. Okay, this is another question about CBDC. I hope you are clear. So what did you learn so far? Generally, from the chapter of RBI, you can get around 1 to 3 questions. Minimum 1, maximum 3. From where you can get the questions? Number 1, from role of RBI. Number 2, from current developments. Is that clear? Based upon that, let me just show you the list of topics which I am going to cover here. Just focus on this. All of it is related to your static part. Static part such as basics about RBI, role of RBI, assets and liabilities of RBI, accounting year, economic capital framework. All of this is static. But what is important is this side. Can you see the current developments? New features in CBDC, storing green bonds. I hope everyone must have heard about it. QR code based vending machine, storing gold bonds, floating rate bonds, green deposit framework. All of this are the current developments with RBI. Is that clear, everyone? So what we will do is, wherever relevant, I will be integrating the static part along with the current developments. So by doing that kind of integration, we'll be covering the particular topic thoroughly. Is everyone clear with this? Okay. So let's start with the first part, that is the evolution and objective of RBI. For that, I just want everyone to quickly recall what all things you have already studied with respect to the establishment of RBI. I hope you are able to remember the background of RBI. Everyone? Which committee recommended the establishment of RBI? Hilton Young Committee. Which year? 1924. So it was the Hilton Young Committee which recommended the establishment of RBI. That is what we know. And when RBI was established, was it established as statutory body or non-statutory body? It was established as a statutory body. It was created under an Act of Parliament, RBI Act 1934. Are you able to recall how much was the capital of RBI? 5 crores. Everyone knows that, right? Let's quickly look at that. What do you think about it? Now this is something which is tricky. The RBI was established as a government-owned central bank. It was not a government-owned central bank. It was a private shareholders bank. It was established as a statutory body based upon the recommendations of Hilton Young Committee. The problem is in the third statement now. This is what generally happens in UPSC. You have 3 statements, you know 2 statements are either perfectly right or incorrect, then you get stuck at a one question or one statement where you don't know whether that statement is correct or not. Look at the statement. The paid up capital of RBI continues to remain at rupees 5 crores since its inception. Now, सबसे पहले you to answer this, you need to know what is the meaning of paid up capital. What is the paid up capital, by the way? Paid up capital means how much money has the government infused into the RBI. When RBI was set up way back in 1935, April 1st, 1935, government infused how much? 5 crores. That is what we know for sure. But is it even today 5 crores? You'll be surprised to know. You'll be surprised to know that even today, the paid up capital of RBI continues to remain at 5 crores since its inception. Is everyone clear with this concept? Don't you think this is a little tricky? That is what you should know that. Exactly. So that's what I'm trying to do. wherever there are some tricky things about RBI, which you might think is for sure incorrect, I'm trying to tell you that it is actually correct. Right? So this is for sure, you might think it is incorrect. So there are some tricky things which I've taken up, and that is what I'm going to cover it. Is it clear? Okay. So when you see this particular question, we know that the paid up capital is same. So right answer in this case is what? Only 2. Is everyone clear with that? Okay. Okay. So this is what I'm going to do in the class. So wherever some tricky points are there, we are going to cover that. Look at this. Okay. When you look at this particular practice question, it's a new type of questions which has been introduced by UPSC last time. Assertion and reasoning. Now when you see this question, RBI's main mandate is to maintain price stability while keeping in mind the objective of growth. The RBI Act 1934 was amended in 2016 to ensure that RBI's priority would be to control inflation. Okay, let's quickly recap here. If you see the objective of RBI, the objective of RBI is twofold. One, to control inflation, and two, to promote growth. Now, prior to 2016, there was no clear-cut mandate as to where should RBI focus more upon. Should RBI focus more upon controlling inflation, or should RBI focus more upon controlling growth? Because in some cases, what could happen is there could be a kind of dilemma. What kind of dilemma? For example, let's say there is high rate of inflation in the economy. Now, should RBI focus on controlling inflation? Because if RBI focuses on controlling inflation, what will happen to rate of interest? Rate of interest will increase. If rate of interest increases, RBI will control inflation, but what gets hampered? Growth gets hampered. To promote growth, RBI should keep less rate of interest. But if RBI focuses on keeping the low rate of interest, RBI will be able to promote growth, but what gets hampered? Inflation. Can you see there's a trade-off? Then who suggested that RBI should focus on inflation? There was a committee in the year 2016. This committee was headed by Mr. Urjit Patel. So Urjit Patel committee recommended that the main priority of RBI should be to control inflation, and growth should be a secondary objective. Is that clear? And that is when, the concept of inflation targeting was adopted. I hope this part is clear, everyone. So coming back here, first statement, the RBI's main mandate is to maintain price stability while keeping in mind objective of growth. Correct? Hai? Second one is also correct. Now I'll tell you the problem arises when both the statements are correct. Because then you're caught between option A and option B. How do you solve that such questions? Simple is, after the first statement, just add the word because. Immediately after the first statement, and then read the entire statement as one statement. The main mandate of RBI is to maintain price stability while keeping in mind the objective of growth, because RBI Act 1934 was amended to ensure that RBI focuses on inflation, which is correct. So right answer क्या होगा यहाँ पे? Is everyone clear with this? Okay. What do you think about it? Which of the following statutes deal with powers, roles and responsibilities? I hope it is very easy. This, because Government Securities Act will give the power to RBI to issue government securities. It gives the power to RBI to regulate the payment and settlement system. It gives power to RBI to regulate the foreign exchange. So all fine. Look at this. If you see the preamble of RBI, which is not the function of RBI. Okay, someone doesn't know about it, but then I guess it's a very easy question. You don't know, you're not read the preamble of RBI. Obviously, no one reads the preamble of RBI Act. But still, you can take a calculated guess. RBI will issue banknotes. RBI will keep reserves, minimum reserve concept. RBI will operate the credit system of the country. And RBI will regulate the expenditure of the government to ensure fiscal discipline. Whose responsibility is to regulate the expenditure of the government? FRBM Act. It is under the FRBM Act and not under RBI. Is that clear, everyone? Okay. These are some things about the establishment of RBI. I will be sharing this at the end of the class. Those of you who are from outside, you can just go to that. Okay? Okay. Evolution and objective. Let's quickly look at the second aspect of RBI. Now, with respect to evolution and objective of RBI, look at this question now. The central government can issue directions to RBI in matters of public interest. Which is that section? Section 7. We know that, right? It was in news also. But second statement, this is something which is tricky. The central government can supersede the board of directors. Distressed banks. But can it supersede the board of directors of RBI itself? Okay, this is what I will be discussing quickly. So what I have done is some important provisions of RBI Act 1934 which are very tricky. I'm going to discuss this quickly. Okay. Look at this. Bank note. This concept is important because the RBI Act 1934 was recently amended in the year 2022 to mean when we say bank note it means physical note as well as CBDC. It's the latest. Then capital of RBI. I said capital of RBI was 5 crores and even today it has continued to remain as 5 crores. This is another important part. Look at this. Can you see this? Autonomy of RBI. Generally, RBI will enjoy independence and autonomy. However, government can issue directions to RBI in matters of public interest, and government can even supersede the board of directors. Now you understood? I told you I'll cover the tricky parts. And generally what you will learn is when you read this question, your human mind will say it is not correct because how can government supersede the RBI itself? But here what logic you should apply? I'll tell you what. You have the power of the government to issue directions to RBI. If you just enjoy power to issue directions, what's the use of that particular power if you're not been able to supersede it? So the next logical step kya hoga ki government will also have the right to supersede the board of directors. Is that clear? Look at this. In the RBI Act 1934, it has been mentioned ki what all functions can the RBI can transact. What all roles RBI can transact. Can you just see? Issue bank note, accept deposits, purchase and sale, providing loans to government, banks, and यहाँ पे क्या है? Not just banks, even all India financial institutions. You know there are 5 all India financial institutions. Purchase, sale, and discount. What is it? Bill of exchange. I'm not sure how many of you know about it. We have a monetary policy tool called as bank rate. Under this bank rate, earlier what RBI used to do, RBI used to discount the bill of exchange in order to give loans to the banks. But now RBI has discontinued bank rate to give loans. Now bank rate is no longer used to give loans to the banks. Now bank rate has become what? penalty rate of interest. But can RBI discount the bill of exchange? Yes, it is there in the RBI Act 1934. Then you can see purchase and sale government securities. What is this tool called as? Open market. Bank rate means it's a tool through which RBI used to give loans to the banks earlier, but it has been discontinued now. RBI is no longer using bank rate to give loans. Bank rate has become a penalty rate of interest. When banks fail to maintain CRR, SLR, banks will be required to pay a penalty. That penalty is the bank rate. Is that clear? Buy and sell shares in selected financial institution. Now this is something which is tricky. Can you see this? It has been mentioned in the RBI Act 1934 that RBI can actually buy and sell shares of NABARD as well as SBI. Clear with this? And look at this regulation of NBFCs as well as money market. So who is regulating money market? The regulator of money market is also the RBI. And that power to regulate money market, RBI is getting from the RBI Act 1934. Clear with this? And this is something which is interesting. What RBI cannot do. Can you see this? Purchase shares of banks. Now this is something which is tricky. यहाँ पे क्या लिखा है? RBI can purchase shares of all India financial institutions such as NABARD as well as SBI. But यहाँ पे RBI cannot purchase shares of banks. Which banks I'm talking about? The commercial banks. That's the basic difference. RBI cannot give loans to the banks against the security of shares and against the security of immovable property. So it can give loans against what? Against the government securities. Is that clear? So, bill of exchange, we'll discuss that in the monetary policy tool. Is that okay? Okay. You can see here. The central government can issue directions to RBI in matters of public interest. Yes. Central government can supersede the board of directors. What do you think about the third one? Is it mutually decided? There is a separate framework, right? Economic capital framework. So when you read this, the first statement is correct. The second statement is correct. And this is not something which is mutually decided. It has been laid down under RBI's economic capital framework. Which committee? Bimal Jalan committee. So right answer in this particular case is only 2. Take your time. How many of the above roles can be performed by RBI? Provide loans to all India financial institutions? Yes. Borrow loans from commercial banks? Think of it. Reverse repo hai na? We have the concept of reverse repo. Reverse repo is the tool through which RBI borrows loans. In fact, we don't call it as borrow. It's like RBI accept deposit. Buy and sell the shares of commercial banks? No. Buy and sell foreign exchange? Yes. So answer is only 3. Is that clear? Okay. Okay. Now with respect to structure of RBI, let's quickly have a look at the important developments with respect to structure of RBI. Starting with the first one. Let me explain this in detail. Can you see here? It is from Business Line 2023. In a majority verdict, Supreme Court finds no flaw in demonetization process. Let's quickly understand the background and tell and discuss as to why is this important. If you see the legal framework, right? Under the legal framework, that is RBI Act 1934, it has been mentioned that the central board of RBI should recommend the government for demonetization of the banknotes. So demonetization of banknotes should originate from where? From the RBI. This is what we know. It has been mentioned in the RBI Act 1934. But let's see what actually happened in the year 2016. In the year 2016, based upon the arguments and counter arguments presented before the Supreme Court, it was said that the government of India, it asked the Reserve Bank of India to recommend the government of India to undertake demonetization. You understood this point? Let me simplify this. Government asked Central Board of RBI to recommend to the government of India to undertake demonetization. There's a controversy now. What is that controversy? The controversy here is from where should the recommendation originate? The recommendation should originate from RBI, but here it originated from the government. Did you get the point? That is the first controversy. Second controversy was the government announced demonetization without any law. It did not declare any law. In fact, the government announced demonetization through a gazette. So obviously, a list of petitions were filed before the Supreme Court with respect to demonetization. So what was the Supreme Court judgment in this particular regard? Let's quickly understand that. Now this is something which is interesting. Supreme Court said that the recommendation which is given in the RBI Act 1934, this recommendation is mutual consultation between the RBI and the government of India. What is it saying? Recommendation is what? Consultation. And it has said, in fact the Supreme Court said that the government and the RBI were in constantly touch almost like 6 months before the demonetization, and because they are in constantly touch, there was a mutual consultation. And because there was a mutual consultation, can you see what was the Supreme Court's verdict? That it was completely allowed. It was not illegal. You understood the recent context? Now this is a very interesting case which went before the Supreme Court. And secondly, the Supreme Court also said that government can announce demonetization without any need for law. It can announce demonetization through a gazette also. Is that clear? Why is it important? Is because of a simple reason. Look at this question. 2021. 2021 mein, don't you think the office of governor was in news? Why was office of governor in news? Because the then RBI governor, Mr. Ujit Patel, resigned. That is one. And number two, section 7 of RBI Act was in news. Because governor was in news, because section 7 was in news, they asked a question which is very static. Now what can be asked is a question on what aspect? Central Board of RBI. Is that clear, everyone? Apart from that, there are other developments also with respect to Central Board of RBI. Can you see? Now this is something which is important. The Central Board of RBI has decided to cancel the license of how many cooperative banks? 8 cooperative banks in the year 2023. You must understand that within the Central Board of RBI, there is a separate board called as Board for Financial Supervision. Board for Financial Supervision undertakes the supervision of all the regulated entities such as banks, NBFCs as well as cooperative banks. So in that context, within the Central Board of RBI, what becomes important is Board for Financial Supervision. Is that clear? Same way. Can you see? This is another interesting thing. Shaktikanta Das, not the first RBI governor to be reappointed. Let me discuss about it. If you see RBI Act 1934, legally speaking, it has been mentioned that RBI governor enjoys maximum tenure of how many years? Maximum tenure of 5 years. And RBI governor is also eligible for what? Reappointment. Now, what was the convention which was followed so far? Under the convention, what used to happen was RBI governor Normally they used to be appointed initially for a period of how many years? 3 years. Initially. Once they complete the tenure of 3 years, then what they used to do, they used to give them an extension of another 2 more years. And in some cases, after those 5 years, they used to get reappointed. Now, for example, prior to Shaktikanta Das, it was Mr. Bimal Jalan, who was also one of the RBI governor. He got reappointed. Is that clear? But let's see what happened in case of Mr. Shaktikanta Das in this case. What he happened is, remember 2018? 2018 who resigned? Urjit Patel. After that, 2018, Mr. Shaktikanta Das was initially appointed for a period of 3 years, which is the normal case. But what happened to other governors? They got extension of 2 more years. But in case of Shaktikanta Das, what happened is, his tenure of 3 years got ended. Instead of giving an extension, what happened now? He has been given another tenure of how many years? 3 years. Because he is eligible for reappointment. Did you understand this case? How this time it is different? Everyone? Okay? Can you see this one? WhatsApp pay only after RBI nod, Supreme Court told. There is a regulation of payment and settlement system. What is that board called as? Board for Supervision and Regulation of Payment and Settlement System. Look at this. RBI against independent regulator for payment system outside the central bank. It is way back from the year 2018. What is this controversy? Let me just tell you this. You have payment and settlement system, right? Payment and settlement system means basically transfer of money from one bank to another bank, which is generally done through various apps that we know, like you have Phone Pay, then GPay and so on. Right now, who is regulating them? RBI. Within the central board of RBI, there is a separate board called as Board for Regulation and Supervision of Payment and Settlement System. But way back in the year 2018, government proposed that the regulation of payment and settlement system should be done by independent payment regulatory board, which is outside the RBI. And you know what RBI argued? RBI thought that the government is going to clip its wings. Why? Because don't you think RBI powers will get reduced? That is one thing. Second, RBI also believes that bank and payment and settlement system are so integrated that you cannot differentiate between the two. If I am transferring money from my bank account to your bank account, if there is a failure of that, don't you think banks are also equally involved? How can we have a separate independent payment regulatory board and separate entity for regulation of banks? That is when this was a news. I hope you have understood all of this in the last 18 to 2023, 5 years. Is that clear? Okay, quickly take your time, recall what all things you know with respect to Central Board of RBI. Everyone is knowing about Central Board of RBI? Okay, let's take up some questions. Look at this question. The Central Board of RBI is maximum of 15 members? No. Maximum of 21. All the members of Central Board of RBI enjoy maximum tenure of 5 years. There are two types of directors, official directors and non-official directors. Official directors 5 years, non-official directors 4 years. The recommendation of Central Board of RBI is binding on the government. Obviously, it's a recommendation, and just now we discussed, according to Supreme Court verdict, what does recommendation mean? Mutual consultation. Recommendation is not binding, right? So, right answer in this case is none. Is that clear? Just take a look at this. The RBI governor is appointed by the president, is not appointed by the president. He is appointed by the central government. He's appointed by the central government, right? It's like cabinet committee on appointments. The RBI governor can hold office for a maximum period of 3 years. Maximum period of 5 years. RBI governor is not eligible for reappointment. He is eligible for reappointment. The RBI governor heads the board for regulation and supervision of payment and settlement system. Deputy governor or RBI governor? He is actually the RBI governor. Let's quickly have a look at this. Look at this mind map on Central Board of RBI. Can you see the composition? Kitne hai? 21 members. We have 21 members in the Central Board of RBI. Members are categorized into two types: official directors and non-official directors. And can you see, official directors, which include RBI governor and deputy governor, they enjoy tenure not more than 5 years. Non-official directors, 4 years. Is that clear? Okay. And then quickly have a look. There are important committees under Central Board. One is Board for Financial Supervision. This will undertake supervision of all the regulated entities. It is a part of Central Board of RBI only. Then there is Board for Regulation of Payment and Settlement System, which is also part of Central Board of RBI. But legally, where is it set up? Which act? Payment and Settlement Act. It is not set up under the RBI Act. And it will authorize all the payment system operators, and it is chaired by who? RBI governor. Is that clear? So, going back here, when you see this question, take your time. The board has been set up under the Banking Regulation Act 1949. What do you think? The Board for Financial Supervision is not set up under Banking Regulation Act 1949. Yes. The board functions as a committee of Central Board of RBI. The board carries out integrated supervision. Yes. Look at this. Consider following statement with respect to board for regulation of payment and settlement system. What do you think about the first statement? Correct? It is a statutory body created under RBI Act 1934. It is not under RBI Act 1934. All the entities intended to commence payment system should obtain prior approval. I just now showed that particular entity's name. What was that entity's name? WhatsApp Pay. WhatsApp Pay was supposed to get the prior approval from RBI, right? The board for payment and regulation system is headed by the governor of RBI. Yes. The answer is only. Is this clear, everyone? Okay. Now, with respect to the role of RBI in, sorry, it is not under any act. It is a kind of formality. It is under the Central Board of RBI only, but there is no law setting up of the Board for Financial Supervision. Okay. 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 Now, with respect to printing of notes, let's quickly look at some important things, some important developments. Sabse pehle, look at the development number 1 is RBI has decided to introduce 2 features into CBDC. First feature is the feature of programmability. Second feature is function offline. You have made UPI and CBDC interoperable. What's the meaning of interoperability? CBDC, you must understand, it is a money, whereas UPI is a payment system. So we can actually transfer CBDC using UPI now, right? So that is what has been made interoperable. We'll be discussing that. RBI to pull out 2000 rupee bank notes. You must have heard of that. Withdrawal of 2000 rupee notes. And RBI has introduced QR code based coin vending machine. recently in 2023. And then there's a very interesting concept. What actually happens is every month RBI publishes a bulletin called as monthly bulletin. In that it gives a bird's eye view of the economy. In one of the monthly bulletin published last month, RBI introduced a concept called as what? Currency paradox. We will be discussing that currency paradox. Is that clear, everyone? So let's start with a discussion of RBI's role in printing of notes. Okay, there are some things which are very easy. Look at this. RBI has a sole authority to print the bank notes. सबसे पहले, some of you might think that 1 rupee note is printed by the government. But 1 rupee note, legally speaking, is not considered as a bank note. So when I'm saying bank note means it's a note printed by RBI, which is correct. RBI can print notes of denomination ranging from 1 rupee to 10,000. Minimum denomination कितना होना चाहिए? 2 rupees. All the bank notes are liabilities of RBI. Yes, all the notes are the bank notes are liabilities of RBI. Right answer is this case 2. Is that clear? Okay. I hope everyone knows the minimum reserve system. Let's quickly recall minimum reserve system. It is a system which the issue department of the RBI uses for printing of bank notes. Under this system, there are 2 criteria which RBI's issue department is required to fulfill to print notes. Criteria number 1, how much reserve should be there? 200 crores. 115 crores worth gold and 85 crores worth foreign currency assets. Criteria number 2, liabilities and assets both should match. That is what you know. Issue department should maintain minimum reserves of rupees 200 crores at all the times for printing of notes. There is a quantitative restriction on printing of bank notes. Is there a limit that RBI can print only this much amount of notes? Can RBI print unlimited notes? Yes. Because only thing which is stopping RBI from printing notes is assets and liabilities should perfectly match. Right? The right answer is 1 only. Is this clear? Okay. What about this? Now this is something which is very tricky. You know that minimum reserve system has foreign currency assets, right? What can be part of the foreign currency assets? All 3? SDR, is it part of the assets? Now let's, it is part of forex reserves, but can it be part of the assets of the issue department for printing notes? Okay, let's quickly have a look at this. Okay, this is a minimum reserve system which we use for printing of notes. Let's quickly recap this. We should have minimum reserves of 200 crores. Can you see here? Foreign currency assets can be in the form of following things. This is as per the RBI Act 1934. Can you see here? Government securities of foreign countries which are members of IMF. Deposits with the central banks of foreign countries which are members of IMF. Bonds issued by international organizations, and the last part is what? STR. You know forex reserves, right? Forex reserves are actually part of our, the issue department assets are actually part of forex reserves also that way. Is everyone clear? It is there in the RBI Act 1934 as well. And you know the criteria number 2. Criteria number 2 क्या है? Liabilities and assets should both be same. Is everyone clear with this concept? Okay. So going back to the question, look at this question. How many of the above can be assets of the issue department of the RBI in India under the minimum reserve system? All the three. Is it clear, everyone? So let's move to the next part. Okay. Now we are going to cover the topic of CBDC, Central Bank Digital Currency. But I hope everyone knows the basics of CBDC. Let's quickly recap the basics of CBDC. Which committee recommended introduction of CBDC? याद नहीं है? Subhash Chandra Garg Committee. Okay, let me just quickly, for the benefit of all, please have a look at this mind map. Okay. You know that there has been rapid growth in the private cryptocurrencies in India. Because of private cryptocurrencies, government is concerned. The concern of the government is private cryptocurrencies can be used for a number of illegal purposes. So based upon that, government had appointed a committee headed by Mr. Subhash Chandra Garg. Subhash Chandra Garg committee recommended that government should ban the private cryptocurrencies and in its place introduce central bank digital currency. So based upon the recommendations of Subhash Chandra Garg committee only, we have introduced the concept of CBDC. Is that clear, everyone? Okay. Now look at the main features of CBDC, central bank digital currency. You know, CBDC has now been made programmable. We'll discuss that concept, programmable. It is a legal tender, just like the banknote is a legal tender, and it is traceable as well. Okay. So keeping this as a background, let's take up some questions from the topic of CBDC. Look at that. With reference to RBI central bank digital currency, consider the following statements. The RBI Act 1934 has been amended to facilitate the introduction of CBDC. Unlike currency notes, CBDC would not be considered as legal tender. It is a legal tender. CBDC would be considered as assets. It is a liability of RBI. India is not the first country to issue CBDC. You can see the countries which have already issued CBDC. Quickly have a look at the country's name. China has issued its CBDC called as digital currency electronic payment. Tunisia, e-dinar. Ecuador, Sistema. Venezuela, Petro. Sweden has e-krona. Based upon that, look at this practice question. E-dinar is not by UAE, it is by Tunisia. So ये incorrect हो गया. Sistema and e-krona, they are correct. The right answer is only 2. Look at that question. What do you mean by fungibility? When we say that CBDC is fungible, we can convert CBDC, but convert CBDC into what? Only cash? Okay, now just check here. When I'm saying that CBDC is fungible, especially in the context of India, fungibility is a two-way fungibility where you can convert CBDC into cash. Not just cash, you can convert CBDC into bank deposits as well. So from the bank deposits, you can convert into CBDC and vice versa. CBDC can also be converted into cash. So that way, option A is incorrect. Option B, ability to convert CBDC into cash and vice versa. Yes, partly true. Ability to convert CBDC into bank deposit and vice versa, partly true. But look at option D. B and C is correct, but which is more appropriate in this case? D is more appropriate because you can convert CBDC into both cash as well as deposits. Is it clear? Okay. Now, what I'm going to cover is programmability. And this is what is interesting. In the context of CBDC, recently RBI has said that we will issue the concept of programmability, will make CBDC more programmable. What do you mean by programmability? This has been highlighted by the RBI in its concept paper in detail. Can you just quickly take your time and tell me? Which of the following objectives can be achieved through, through programmable CBDC in future? There's some problem, the framing of the question. Ensure money is spent only for a specific purpose. ये तो for sure होना ही चाहिए, right? But increase the velocity of money. What is velocity of money, by the way? Velocity of money means how soon the money changes hands from one person to another. For example, let's say if I have a 100 rupee note, in one particular year the 100 rupee note is changing hands 10 times. So velocity is 10 times. So here, can we increase the velocity of money by programming it, CBDC? How? It can lapse. We can program CBDC in such a manner that just like how we have shopping coupons, right? Just like how we have shopping coupons which can actually expire after a certain period of time, we can design CBDC in such a manner that they can expire. So we can have CBDC with an expiry as well. This is something which RBI has said in its concept paper. I'm not saying कि RBI has done it. यहाँ पे क्या है? Future possibilities. Understand that. Can we improve the monetary policy transmission? How? Same money. What is monetary policy transmission? Like if RBI is trying to inject money, actually money supply in the economy should increase, and that money supply in the economy can increase by having CBDC with what? Expiry. How do you convince people to spend money? You can convince people to spend money by having that expiry into CBDC. So that way, all of these objectives can be fulfilled by programmability. Is it clear, everyone? Okay. Velocity of money basically tells us how fast the money changes hands. Like if I have 100 rupees, from A to B, B to C, C to D, how fast the money exchanges hands. If you have CBDC with an expiry date, it is being said that people will spend the money faster because they have to spend that money before that expiry date. Because the people are spending it faster, the velocity of money will increase. Is it clear? Okay. Okay. Now there are some developments in CBDC. That is what I'm going to cover. And then come back to this. But just have a look at this retail CBDC. Presently, there is no need for bank account for opening CBDC wallet. Retail CBDC is issued in same denomination as notes and coins. Retail CBDC can be transferred to someone's bank account. Okay. We are going to cover retail and wholesale CBDC in detail now. There are some things about CBDC which are very tricky. That is what we are going to cover. For example, look at this topic. Whether CBDC should be interest bearing or non-interest bearing. What do you think? CBDC is interest or non-interest? You don't earn any interest on CBDC. Now, Think here, when RBI was discussing whether CBDC should have interest or not, RBI said if CBDC has to be successful, CBDC ideally should have interest. Why CBDC should have interest? If I have 100 rupees, that 100 rupees, if I keep it in my bank account, think of it. On my bank account, I can actually earn interest. Now, if I'm earning interest on my deposit, why will I shift towards CBDC? Unless on CBDC I get what? Interest. So, it will ensure the success of CBDC, because if you don't get interest on CBDC, people will not shift towards CBDC. There's another important advantage of offering interest on CBDC. That advantage here is, you can see, what is it? We can actually improve the monetary policy transmission in India. Now, this is something which RBI had contemplated. How can we improve the monetary policy transmission? Think of it. If you are offering interest on CBDC, by controlling the interest on CBDC, we can force people to invest in CBDC or withdraw from CBDC. Think of it. During inflation, RBI, let's say, decides to increase the rate of interest on CBDC. क्या होगा? People will shift towards CBDC. More of money shifting towards CBDC. What will happen to demand in the economy? Reduces. On the other hand, during recession, if we reduce the rate of interest on CBDC, less inflow into CBDC and higher demand. Did you get the point? Why did RBI not go for this in that case then? So, but why did RBI not go for this? What is the problem if we start offering interest on CBDC? There's a particular term which you normally use in CBDC. Yes. Yes. The biggest concern is it will lead to what is called as disintermediation. What is this disintermediation? Think here, if you start offering interest on CBDC, people will shift towards CBDC. People will not come towards deposits. So what will be the banks forced to do? Banks will be forced to increase the rate of interest on deposits. So bank के पास कैसा कम रहेगा? If banks do not have money, the ability of banks to give loans will automatically reduce. I hope this is clear. Apart from that, the other problem is it will affect the credit creation. How it will affect the credit creation? Because the banks will have to offer higher rate of interest, and because they are offering higher rate of interest, what will happen to the rate of interest on loans? Increase. So RBI has chosen CBDC to be a non-interest pay. Okay. Now look at this. Direct and indirect CBDC. I hope everyone knows direct and indirect. What's the meaning of direct model of CBDC? Everything with respect to issue of CBDC, interacting with the customers, everything is taken care by the RBI itself. It's like RBI will not only issue CBDC, RBI will also focus on customer facing operations. All of that is taken care by RBI. But in case of indirect model, RBI will focus only on issuing CBDC, but distribution and all the customer facing operations will be done by who? Commercial bank. Is that clear? Okay. So RBI has preferred what model? Indirect model. Because indirect model will put less burden on the banks. Now look at this. Now this is what is important. Wholesale and retail. Can anyone tell me difference क्या होता है wholesale and retail में? Quickly. Retail is for? Wholesale is for banks. Retail is for people. Okay, first difference. Second? Good, good. So wholesale CBDC is account based, retail is token based. Then any other difference that you know? That's it? Okay. Let's quickly have a look at the differences here.
Act as any other node for currency.
Come again.
So in token base, it will act as any currency, like rupee 1, rupee 2, rupee.
Okay, it's in actually the same denomination. Okay, let's quickly look at the wholesale CBDC. What is wholesale CBDC? Wholesale CBDC is a CBDC which is designed to be used only by selected financial institutions. So RBI has selected some financial institutions and only those financial institutions can use the CBDC. Right now it is mostly for banks. For what purpose they can use it? They can use it right now for two main purposes. One, settlement of secondary market trade in government securities, and number two, for the call money market. What is settlement of secondary market trade in government securities? Let's say there's a bank A. This bank A purchases government securities from another bank B. In return, instead of paying in terms of money, it will pay it in terms of what? CBDC. Which is that CBDC? Wholesale CBDC. Apart from that, what is money market? Money market is a place where one bank borrows money from another bank. Bank A, Bank B, they are borrowing money from each other. They will borrow money in terms of what? CBDC. Is it clear? And wholesale CBDC, please remember what kind of model it is? Direct model. And denomination for wholesale CBDC, there is no denomination for wholesale CBDC. Denomination means like there is no 1 rupee wholesale CBDC, 5 rupees, 10 rupee and so on. It's like a normal bank deposits only. Look at this. Form of CBDC. Okay, I'm sorry. Form of CBDC is, it is an account based CBDC. What is account based and token based? That's the next part. Do not worry about it. We'll discuss that. And lastly, what is the advantage of wholesale CBDC? It is used for settlement of transactions between the entities. Retail क्या होता है फिर? Retail is something which I and you can use it. Not just I and you, even our other businesses can use it. यहाँ पे there's a word. What is it? Non-financial. Financial institutions will use wholesale. It can be used for person to person and person to merchant. It is issued in what format? Indirect format. Then can you see here this part? Retail CBDC is issued in the same denomination as, यहाँ पे क्या लिखा है? This is something which is interesting. Retail CBDC is issued in same denomination as coins as well as notes. So you can have retail CBDC of 50 paisa, 1 rupee, 2 rupee, 5 rupee and so on. And then it is actually a token based. Okay. What is token and account? We'll cover that part. Yeah, the clear hai? There are some things about retail CBDC which might be important. Let's quickly look into those things. This is clear. Who can open CBDC wallet? Who can provide CBDC wallet? Some selected banks in India. Now question here is, do you need a bank account for CBDC wallet? Now as per the RBI, it is being said, whenever you want to open a CBDC wallet, the CBDC wallet has to be linked to a bank account. It means all the banks in India have said to open a CBDC wallet, सबसे पहले आपके पास क्या होना चाहिए? Bank account. So who is offering the CBDC wallet now? You can see banks such as SBI, SDFC, ICICI, IDFC, all of these banks are offering CBDC wallet. But to have a CBDC wallet, one needs to have a bank account. But there is something which is interesting. To have transactions in CBDC wallet, उसके लिए bank account नहीं चाहिए. Which means if I have a CBDC wallet, I can transfer money to another person's CBDC wallet. Bank account यहाँ पे necessary है? No. It's like I transfer money from my Paytm wallet to your wallet. That's it. Bank account is not involved here. Did you get the point here? Okay. Look at this. How can we load money into CBDC wallet? Through bank account or UPI apps. Is CBDC a legal tender? Yes. Can we transfer CBDC directly to someone's bank account? We can transfer CBDC only to who? Someone's wallet. Can we redeem CBDC into account? Yes.
So the need for bank account is just to transfer money into our CBDC.
Yeah. So first, for opening a CBDC wallet, you need a bank account. No. There's no interest on CBDC. Utkarsh, CBDC is not a share which can be traded on stock market, right? CBDC is the money. Okay. Now, just an example here. Let's say there's a person X and there's another person Y. This person X purchases something from person Y worth rupees 17. And let's say this person X does not have a change. Person X will pay 20 rupees to person Y. In return, person Y will give a change of how many rupees? 3 rupees. Is that clear? How do you think this transaction will take place in CBDC? From the wallet? Do you think there will be double transaction in this case? Double transaction होगा यहाँ पे? Okay, please read this part. This is something which is interesting. If you have to purchase something worth, one second, 15 rupees item from a merchant, but let's say you have only 20 rupees denomination in your digital wallet, while entering amount, you just have to enter the amount, exact amount in this case. Exact amount यहाँ पे कितना है? 15. You might have a money worth 20 rupees only. Automatically what will happen? Your CBDC wallet will deduct that 15 rupees and transfer it to the concerned person. In this case, when I'm doing a transfer of CBDC, person X is transferring CBDC to Y. Person X has 20 rupees worth CBDC, for example. What he will do, while entering amount, he'll enter the amount as only 15. So automatically that 15 rupees will go to the person Y. Is that clear, everyone? Okay. So whatever coins का 50 पैसा है, 1 rupee है, 2 rupee है, same currency denomination will be there. So there what will happen is 15 rupees will go here. Here if I want to transfer 17, 15 plus 2 rupees. Okay. Exactly.
So how is it different from the normal UPI payment?
UPI is a payment system. CBDC is a money, right? Which one? We'll come to that. That's the next part. Yeah, exactly. UPI is not a money. UPI is transferring of money from one bank account to another bank account, right? हाँ, वो अपने आप उसको शिफ्ट करेगा. 10 plus 5. Okay. Is there any minimum balance required? No. And then will users be paid interest? No. Coming to last part here, look at this concept. With respect to CBDC, there are two concepts which is important. One is account based CBDC, other one is what? Token based CBDC. Let's try to understand what is this account based CBDC. Okay. In account based CBDC, what actually happens is the CBDC is stored in a account. Just like how you have your money stored in a particular account, CBDC here is stored in a particular account. And to access this particular account, you need to establish your identity. How do you establish your identity? Can you see here? This is an account based CBDC. Here there is a person A. Person A says, I am A. Transfer, let's say $1 from my account to C's account. He is giving a direction to a particular bank. when he's giving a direction to a particular bank, this person A is also establishing his identity to a particular bank. So bank will check the identity of the person, and the bank is sure that the person is actually the owner of a particular account. Only then the money gets transferred. So here the role of the bank is to check the identity of the account holder. Normally, if you're doing online transaction, how do you check the identity of the account holder? The, online. There are passwords, right? So where you have passwords, then like if you have a own digital app, right? Like iMobile, to that particular app, you can have your face recognition system, which is acting like a passcode. Getting this point? Right? Then there's a UPI pin, there's a separate pin also to access your this one app. That is what is the account based. What is token based here? Token based in this particular case means a person says that I am in possession of CBDC because I know the passcode of the CBDC. It's like saying in this particular case, person says, I know the password. I know the password to a token. And because I know the password to a token, I own the token. Yahan pe what is the person saying? I am the owner of the account. So I am the owner of the account. I own the money. Here person is not saying I am the owner. I am saying person is saying that I know the passcode. Now problem here, let me tell you here. The problem here is, according to some people, they say, how are you establishing identity here? Through a password. And here, how are you establishing identity? Password. So they say there is not much of a difference between this concept of account based CBDC as well as token based CBDC. Is that clear? But as far as you are concerned, you should know that yahan pe token based CBDC what we have is valid. For account based CBDC what we have is a account. Is it clear, everyone? Okay. There are some cross border payment systems that we have introduced. You know, different countries have introduced their own CBDC. Now we are trying to link the CBDCs of different countries. You must be knowing that we are trying to link UPI systems also different country. One of the latest thing is India's UPI has been linked to Singapore's Pay Now. Just like that, we are trying to link CBDCs of different countries, for which there is one big project of Bank of International Settlement. That project is called as Project M-Bridge. Please remember that. It is a multi CBDC common platform for wholesale cross-border transactions. And can you see here, India right now is not part of this particular project. There are some global examples. 1, 2, 3, 4, 5, 6. In UPSC prelims, you might get a question, Project Aber, Dunbar, Jura, sometimes seen in news, deals with. Just know that they are dealing with multiple CBDC platforms. If you know that much, that is more than sufficient. This is the last concept. This is a new development called as synthetic CBDC. Anyone knows what is synthetic CBDC? If you could guess, synthetic CBDC. No. No, you cannot mine CBDC. It's like if you start mining, you start creating money. You are becoming central bank itself. What is synthetic CBDC? Okay, it is still in pilot stage. Let me tell you, it is not something which is fully launched. It is still in pilot stage. How does this work? Let me tell you. Remember, there's a direct model of CBDC. In a direct model of CBDC, you have the central bank of a particular country, which will not only issue CBDC, apart from CBDC, it will also perform all the customer facing operations. In case of indirect model, central bank of a particular country will only issue CBDC. But what does the bank do? Bank will perform all the customer facing operations. What customer facing operations? Like opening a wallet for the customers, facilitating transfer from one wallet to another. All of that is in a indirect model. Synthetic में क्या हो रहा है? Synthetic is actually a combination of direct and indirect. In what way? Let's try to understand. In synthetic model, what happens is you have central bank. Let's say I am the central bank here. Central bank will issue CBDC to multiple banks in a particular country. For example, let's say there's a bank X and bank Y. Just as an example, let's say central bank has issued $1,000 worth CBDC. For bank X, it has issued $500 worth CBDC. For bank Y, $500 worth CBDC. यहाँ पे क्या हो रहा है? In case of indirect model, the same CBDC bank is giving to the people. But here what happens is, each of these banks, they will create their own CBDC. What will we call that as? Intermediate CBDC. And can you tell me how much CBDC the bank X can create? 500. Have you heard of something called as stable coins? What is a stable coin? Stable coin is a coin which is linked to an external currency. And how much of stable coins can be issued? That much they have, right? So in this particular case, X can issue its own CBDC, but it can issue only how much? 500. And that it will issue to its multiple customers. In case of Y, Y will also issue $500 worth ICBDC, integrated CBDC, to multiple customers. Can you see there's a combination of direct as well as indirect model? समझ आया? Now this is something which has been authorized where? Hong Kong. Can you tell me what is the biggest advantage of this synthetic CBDC? You can say that to a certain extent. The biggest benefit here is, as far as central bank is concerned, its role is limited to issuing CBDC only to the concerned financial institutions. Central bank will deal only with whom? Banks. Who is dealing with the customers? The banks themselves. Is everyone clear with this concept? Intermediate CBDC. Yeah, it's like a synthetic. No, there's absolutely no difference between normal CBDC and intermediate CBDC. Everything is same. But can you tell me whose liability does it become? ICBDC? Banks. जो अभी जो CBDC है इंडिया में किसका liability है? RBI. So this ICBDC becomes the liability of the bank. Is that clear? It is still in pilot mode. Sorry? Yeah. Exactly. This is just in pilot stage, do not worry about it. And this is not something which you are following in India. At most in UPSC prelims, if you get something like ICBDC, what does it deal with? You should be able to answer it.
How would banks transact between themselves in case of IC?
And when banks are dealing with each other, right? When banks are dealing with each other, they will deal only in CBDC. Wholesale. They are interoperable. Okay. Now let's quickly take up the questions. Practice question number 18 quickly. Nilesh, there is no concept of overdraft on CBDC. Presently, there is no need for bank account for opening CBDC wallet. I told you two things. You need a bank account to open a CBDC wallet, but don't need bank account to facilitate transfer in CBDC. So presently there is no need for bank account to open CBDC wallet. गलत है. Retail CBDC is issued in same denomination as notes and coins. Retail CBDC can be transferred to someone's bank account. You cannot transfer to someone's bank account, you can transfer only to someone's wallet. Wholesale CBDC. The wholesale CBDC is the token based CBDC. It is not a token, it is an account. The wholesale CBDC can be used only by selected financial institutions. Presently, wholesale CBDC can be used for making payments in the primary market for buying government securities from RBI. Think of it. It is right now allowed for secondary market, right? RBI is thinking of allowing them in the primary market, right? Introduction of CBDC can improve monetary policy transmission. It can, but that is the case if CBDC is interest bearing. But अभी तो interest bearing नहीं है. What do you think? Do you think can it improve the monetary policy transmission? It can be programmable, understand that. And यहाँ पे it is not an assertion. What is it? May. Yes. May तो कुछ भी हो सकता है. Future possibilities. Right? The RBI pays interest on CBDC. No. I hope you know the answer to this. We discuss disintermediation. What is the meaning of disintermediation? The bank role is to act as intermediary between the depositors and borrowers. That role of the bank is getting affected. Decrease in banks deposit the RBI leading to lower profits? No. Decrease in deposit the banks leading to decrease in the credit creation. Right? Okay. Now coming to the next part, currency demand paradox. What is this currency demand paradox? Let's try to understand this. Then we'll come back to solve this practice questions. Okay. Now this currency demand paradox was actually used in the monthly bulletin of Reserve Bank of India. So what is this currency demand paradox? Think of it. In any country, people will use two modes of payment. One is cash and the other one is electronic payments. Ideally, if the share of electronic payments increases, what should happen to the demand for cash? Reduces. Ideally, this should happen, right? Let's see what is happening in India, because India is exceptional most of the time. So let's see what is happening in India. Ideal scenario, increase in digital payments should be accompanied by decrease in demand for currency. Ideal scenario. Okay, think of it यहाँ पे 2007-8. This was the time around which we started implementing Payment and Settlement System Act. A lot of digital payments were introduced in India, and because of introduction of digital payments, this shows CIC, which is currency in circulation. Can you see large scale fall in the currency of circulation? Now it's like saying electronic payments increased and the demand for currency reduced. India was not an outlier in this particular case. But after 2018, particularly in India, value of digital payments value has jumped. Can you see from 12% of GDP to 76%? It's like saying in 2018, if you used to make payment of 100 rupees, out of that 100 rupees payment, 12 rupees payment was done in form of what? Electronic. But now in 2022-23, the share of payment which was like 12 has jumped to how much? 76. 3/4 of the payment is done through electronic payments. So in this case, electronic payments has increased. Don't you think currency in circulation should have got further reduced? But instead of further reducing, currency in circulation has actually got increased. क्या ये बोर्ड? Currency demand paradox. Don't you think India is an outlier in this particular case? Why do you think demand for currency has increased after 2018? क्या रीजन हो सकता है? One is, one of the reason people demand money is for a precautionary motive. You know what is precautionary motive? Because of uncertainty, people will demand for more cash. Can I say during COVID, there was large scale uncertainty. Because of large scale uncertainty, people started demanding for more cash. That is one reason. Second reason is, you must understand, money in any country serves two purposes. Purpose number one, money is a medium of exchange. Apart from being medium of exchange, money is a store of value. Now, Indians are very clever. What Indians are doing right now is, when it comes to money as a medium of exchange for making payments, Indians are preferring electronic payments such as what? UPI. Especially for small value transactions. But when money is to be used as store of value, for store of value, what are they preferring now? Unofficially, we know the reason for that. But obviously, government or the RBI will not say why the share of cash is higher. What does the RBI's monthly bulletin say? That's more important. RBI's monthly bulletin says that we have a large share of informal economy. And we know what does the informal economy the RBI monthly bulletin is referring to. I hope you understood that point. So it is like people are preferring cash as a store of value. लोग cash अपने पास रख रहे हैं. And no wonder it is because, to a certain extent, it is hinting towards what? Black money. Did you get the point here? Third and most important reason is something called as opportunity cost of holding cash has reduced in India. Please pay attention. This is something which is interesting. Opportunity cost of holding cash has got reduced. Think of it. I have 1,000 rupees with me. I can keep that 1,000 rupees in the form of cash with me, or I can go and deposit this 1,000 rupees with a particular bank. There are two options for me. Now, what is the meaning of opportunity cost? It's the cost of opportunity that you lose. Something which you lose. Like, you cannot keep this 1,000 rupees both in the form of cash also as well as deposit. If I keep that in the form of cash, I'm losing something. What am I losing? Interest on deposit. If I keep this 1,000 rupees in the form of deposit, I'm losing something. What is that? Liquidity. I need urgent money. I might not get urgent money, particularly if that money I've kept in FD, fixed deposit. So there's an opportunity cost there. Now think here, if I prefer to keep this in the form of cash, I'm losing an opportunity cost. This is the opportunity cost. That opportunity cost is what? Rate of interest. Now, this opportunity cost can be higher or it could be lower. When will the opportunity cost higher? When the rate of interest is higher. Inflation ke time pe, during inflation, if you hold on to cash, what will happen to your opportunity cost? Increases. On the other hand, if the rate of interest reduces, what will happen to your opportunity cost? Reduces. What is happening now, as per RBI, opportunity cost of holding cash is getting reduced. Can you see what happened during COVID time? What happened to that rate of interest? During COVID, rate of interest got reduced. Because the rate of interest got reduced, the opportunity cost of holding cash got reduced. Is everyone clear with this? Okay. So whatever explained, it is there in the PPT, can go through that. Let's quickly have a look at the question now. Which among the following best describes the concept of currency demand paradox? C, right? Increase in demand for cash despite decline in payments made through cash. And why are people demanding cash? Because cash is not for medium of exchange. Cash is for what purpose? Store of value. Now take your time. The RBI increases or decreases the policy rates to control inflation or to promote growth. This forces the banks to change the rate of interest on deposits accordingly. What will happen to the opportunity cost? Opportunity cost of holding cash increases with increase in interest rates. I hope this is clear, everyone. Okay. What did you understand? RBI says that the opportunity cost of holding cash has got reduced because of decrease in rate of interest. This is the official reason given by the RBI. Yeah. Okay. Fine. So it's already 5:20, and what I would request all of you is, from tomorrow onwards, I might have to extend the class, right? So that is as usual. So we'll have class until 5:30 from tomorrow onwards. I hope it is okay with everyone. Half an hour extra because I need to complete the syllabus as well. Okay, I started at 3:30. I got confused. I thought I started at 3. Okay, fine. In that case, you can sit. Okay. Now coming to the next part, that is QR based coin vending machines. Okay. This is a new concept which RBI has introduced. Let's try to understand what is this concept. It is being said that right now in India we are facing shortage of coins. And you know who mints coins? Government of India mints the coins. The Government of India mints the coins under the Coinage Act of 2011. Once the coins are minted, the coins are required to be distributed by the RBI itself, right? The problem is there is shortage of coins in India, and RBI, to address the shortage of coins, earlier had set up coin vending machines across India. The problem with those coin vending machines is, to withdraw coins from there, you have to use cash. Like you have to use cash to withdraw coins from the coin vending machines. And normally you don't find these coin vending machines across India. You'll find it only in certain selected places. So now to address this particular problem, RBI has introduced coin vending machines wherein you can actually withdraw coins by using a QR code. Which means the payment in this case will not take place to what? Banknote. Payment will take place to what? UPI. It's similar to your ATM machines, where ATM machines, instead of giving banknotes, will give you coins. So it's the latest development which has taken place here. You can just see. Legal framework: coins are minted by the government under the Coinage Act of 2011. However, it is the RBI's responsibility to distribute these coins. How can we get the coins? Bank branches exchange the banknotes with the coins, or we can go for coin vending machines which are located in selected places. What is the new initiative? One can get coins through what? QR code based coin vending machines. So far so clear? Okay. Now coming to next part, that is assets and liabilities of RBI. I hope everyone knows assets and liabilities. Okay, let's quickly look into that part. Take your time. The question here is, which of the following is or are not the assets of RBI? Okay. When you come across such question, to make it easy, what you should do, you have to take out the word not and solve this question as a normal question. But then यहां पे करेक्ट आंसर नहीं चूज करना है आपको. You have to choose the incorrect answer. So that is what you have to do. So you can see which of the following are the assets of RBI. Notes in circulation, government securities in custody of RBI, gold, ways and means advances. Yes. Not the assets. Incorrect. How many? Only one. How many of the above are not the liabilities of the banking department of the RBI? Yeah, good. Okay, not the liabilities, right? Loans given to the banks are what? Assets. Cash reserve ratio. Cash reserve ratio is a liability. Deposits is also a liability, right? So we need to find out not the liability, in other words, means assets. Clear?
Sir, can you explain that lease in custody of RBI?
Which one?
In the 24.
Okay, when the RBI's issue department has government securities, right? We discussed now, under the minimum reserve system, what can be the assets? Right? So we can just have a look at this particular mind map where I have incorporated what constitutes the assets of the issue department. So you can see gold, foreign securities, and can you see here government securities? No, 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 no. It is a liability because RBI is required to give it back, right? No, no, no. Okay. Take your time. It says, consider the following scenarios: adoption of expansionary policy, announcement of demonetization, recent withdrawal of rupees 2000 notes. Which among the following is likely to increase the assets of RBI? When will the assets of RBI increase? So when you see the first one, adoption of expansionary policy, what happens in expansionary policy? Under expansionary policy, you have to see it in two ways. One, seeing from the perspective of issue department. Seeing from the perspective of issue department, can I say the issue department has to supply more money? But that money which issue department supplies, वो क्या होगा issue department के लिए? Liabilities होगा. But to supply that excess money, issue department should acquire equivalent amount of assets or not? If it has to print 100 rupees, which is the liability, it has to have an asset worth 100 rupees. So expansionary policy will lead to assets. It will also lead to increase in liabilities. That is one way to look at it. Other way to look at it is, look at banking department. Can I say banking department gives more loans, right? Gives more loans to the banks. So because of which, what will happen to the assets? What about announcement of demonetization? Increase or decrease? क्या होगा? Let me just tell you an example here. Before demonetization, assets and liabilities. Now, for example, we had assets worth rupees 1000, liability is also 1000. What did we do? We took back this 1000 rupee note from circulation. After taking it back from circulation, what did we do? We printed 500 rupees two notes. It means in this case the 1000 rupees got replaced by another 1000 rupee. Only thing is that the form of liability got changed. Will the asset get changed now? No. But liabilities is increasing, but equally the assets are also increasing, right? Think of it. Liabilities and assets should always match. And here I'm not asking anything about the liabilities, I'm asking only about the assets. Getting it? Now what happened is during expansionary policy in US balance sheet swelled in US. You got to know that. So why did it swell? Because US Fed Bank was pumping in more amount of money. Assets with the US Fed Bank increased, right? Okay. What about recent withdrawal of 2000 rupee note? Can I extend the same logic? Why will it decrease? Same logic. So, which is likely to increase assets of the RBI? Only one. Is everyone clear with this?
Sir, can you please repeat demonetization?
Demonetization point, let's say I have 1000 rupee note earlier. This 1000 rupee note, we are taking it back. In place of 1000 rupee note, we are printing 500 rupees two notes. What is the liability now? Earlier liability was 1000, now also liability is 1000. Did you get the point?
Yes, sir.
So if I take 1000 rupees from you, it's not that I'll keep it with myself only. No, I have to give it back to you as well. I have to give it back in some other denomination. Clear? Okay. Okay. Look at this role of RBI as a banker to the government. When we say that RBI is acting like a banker to government, it's pretty easy. As a banker to government, RBI will accept money, remittances and make payments on behalf of the government. As a banker to government, RBI will give loans to government in the form of ways and means advances, and there's an obligation on the government to maintain minimum cash balances. So right answer, only 3. Okay, let's look at this question. Okay, if you look at the RBI Act 1934, in the RBI Act 1934, it has been mentioned that RBI has a right as well as obligation to act as a banker to the center. But RBI neither enjoys right nor obligation to act as banker to the states. So if you read, the RBI can act as banker to state government. It can act, and that is what it is doing also by entering into agreements. The RBI has a right and obligation to act as banker to state government. It does not enjoy that particular right. So right answer is it clear? Okay. Look at this. So when we say that RBI is acting like a banker to the government, is RBI performing that role directly or indirectly? That is the question here. RBI carries out the general banking business of the government through its own offices and commercial banks. What do you think? Okay, let's read the second point. Only the public sector banks are allowed to act as agency banks. Only public sector banks. Okay, there are two statements which are both are dilemmatic. Only designated branches of agency banks can conduct government banking business. Okay, let me just tell you this thing. Here, when I'm saying that RBI is acting like a banker to government, it has been said from the RBI's side that RBI will carry out banking business of the government mostly through commercial banks. Mostly through commercial banks. But in some cases, it might carry out some of the operations to its own offices as well. Which means the first statement in this particular case is correct. Only the public sector banks are allowed. What do you think? Not just the public sector banks, but mostly public sector banks. But in some cases, there are some private sector banks which also act as a agency banks. Only designated branches can act as agency banks, which is correct. Right answer in this case is only 2. So the details, okay, this is what you should know, just these 2. Okay, with respect to role of RBI as a banker, it is there in the mind map. I'll be sharing, you can just go to this. Okay. Okay, role of RBI as a debt manager. You have these 2 questions with respect to role of RBI as a debt manager. You can see that question is in 2018 and this particular question in 2021. Can you recall some important developments with respect to role of RBI as a debt manager? Huh? One is retail direct scheme, good. One is retail direct scheme. Any current developments? Do you know? It's not a major development. Major development? Anyone? You know that? Sovereign gold bonds. Sovereign gold bonds, recently RBI has issued sovereign gold bonds, not for the first time, but it's an addition to the already sovereign gold bonds which it has issued. Plus, can you see? One recent development is RBI has issued what is called as floating rate saving bonds. It's for the first, it's a continuation, but probably after a long time RBI has issued that. I hope you must have heard about this. Sovereign green bonds. Okay, so these are the developments that you must know. For that, let's first understand when we say RBI is a debt manager, what role does the RBI perform? Just have a look at this role of RBI as a debt manager. We have covered role of RBI as a banker to government, and this is the role of RBI as a debt manager. It means RBI's role as a debt manager encompasses the role of RBI as what? Banker to the government. As a debt manager to the government, what does RBI do? Manage the market borrowings. How does it manage market borrowings? I hope you know the government securities, dated securities, treasury bills, cash management bills, as well as state development loans. Provide ways and means advances to the government to address temporary mismatches. Fix limit on ways and means advances. And last one is issue licenses to primary dealers. Who are primary dealers? Primary dealers are the entities who have been licensed by the RBI to buy the government securities. Primary dealers. So this is the role of RBI as a debt manager. Keeping this in mind, let's take up some questions from important platforms of RBI. Last time there was a question on the platform of RBI. Yaad hai? NDSOM. Good. Negotiated Dealing System Order Matching. So just have a look at this question before the platforms. With reference to advantages of investing in government securities, consider the following statements. What are the advantages of investing in government securities? Government securities are relatively risk-free instruments. Risk-free because they are like issued by a sovereign guarantee. The government will not default. So they are risk-free. Do they have high liquidity? They do have high liquidity because they can be converted into cash easily. Capital gains on government securities is not taxable. It is taxable. Whatever capital gains you get, it is like taxable. Government securities are immune for market risk. What kind of market risk the government securities face? Yield. And then what's the biggest problem? You buy a government security, bond prices in the bond market, they keep on fluctuating. I might buy a bond in the primary market with a face value of rupees 100. Then probably it must have so happened that the demand for a particular bond has got reduced. Because the demand has got reduced, bond prices may have got reduced. So the bond price may reduce, right, in the secondary market. So there's always a risk. So capital gains, the government securities are immune for market risk? No. The right answer in this case is only. Is this clear? You understood this point? Yes? Come again? Relatively risk-free investments in this means case, relatively, when I'm saying the word relatively, it's like in comparison to other investment like corporate bonds and all those things. Is it clear? Okay. Look at that. Market risk, here you understood the market risk, right? Like the bond prices in the market do not remain same. Bond prices might reduce or increase. So the bond prices fall, the investor might face a risk. Now you might be having this doubt, keep bond prices, why are they increasing or decreasing? That we'll discuss in a separate topic. Do not worry about that. Okay? Okay. eCuber platform. How many of the below mentioned facilities are provided by the RBI through the eCuber platform? Okay. Auction of all the government securities to the auction of government securities to all the investors, including the retail investors. But can the retail investors purchase government securities from eCuber platform? They cannot purchase through the eCuber platform. eCuber platform is not available to retail investors. Understand that. Enable banks to maintain CRR deposits with the RBI. Yes? Okay. Let's quickly have a look at the eCuber platform. Okay, we'll come to this. Just have a look at the eCuber platform, all of you. Now, these are some things that you need to know with respect to eCuber platform. The reason why I've included this is last time there was a question about NDSOM. That is why I've included this. It's a core banking platform of RBI. Participants are banks, primary dealers, insurance companies, and mutual fund companies. Purpose, can you see? 1, 2, 3, 4, 5. Maintain current account with the RBI. Enable banks to maintain CRR balances, interbank settlement. Provide ways and means advances to the government and purchase the government securities from the RBI in the primary market. Can you see this note? Retail investors are not participants on the eCuber platform, hence they cannot purchase government securities directly from the RBI and the primary market to the eCuber. Did you get the point? So where can the retail investors buy the government securities then? Retail direct platform. What government securities can people like you and me purchase on the retail direct platform? All? There are some new additions which are there. Let's quickly have a look at that. Okay. Enable retail investors to purchase government securities from the RBI in the primary market. Requirement is retail investors need to have retail direct gilt account with the RBI. Which government securities can you purchase? Can you see there are some things highlighted in green now? Sovereign green bonds as well as floating rate saving bonds. Is that clear? It's a new addition. That's why it becomes important. And then who can open accounts? Only individuals, that is both residents as well as non-residents. What facilities are provided on the retail direct platform? Buying government securities in the primary market or buying and selling government securities in the secondary market. Okay. So going back to the question, how many of the below mentioned facilities are provided by the RBI through the e-QIP platform? Auction of government securities to all the investors, including retail investors? No. Enable banks to maintain CRR deposits? Enable the government to borrow money through ways and means advances? Yes. Answer is only 2. Okay, look at this. With reference to retail direct scheme, consider the following statements. The retail direct scheme enables financial institutions such as banks to buy government securities in the RBI on the behalf of the retail investors. Does it allow banks? It does not allow financial institutions. The retail direct platform provides for trading. It allows for trading. Non-resident investors are not allowed to invest. The answer is only 1. Is it clear? Look at this. This is the latest development. How many of the above government securities can be purchased by the retail investors through the retail direct platform? Earlier, dated securities as well as SDLs. Now, sovereign gold bonds as well as even green bonds also. So right answer is all 4. Is it clear? Okay. Okay. There was a question, I hope you are able to remember, in 2018 with respect to purchase of bonds by the investors. Let's quickly have a look at that. Before 2021, why I'm saying before 2021? Because it was the time before the introduction of retail direct scheme. RBI used to sell government securities in the primary market. Primary market is where new government securities are issued. Those government securities used to be sold on the e-QIP platform and they could be bought by e-QIP participants. I just now told to you who are the e-QIP participants: banks as well as financial institutions. Are retail investors part of it? No. Retail investors can purchase government securities in the primary market directly from RBI. But in this case, earlier it was indirect. Now, indirectly, how they could purchase? 2 things are needed. One, they needed a demat account, and second is they could purchase indirectly through the participants. After purchasing, trading कहाँ पे होता था? Stock exchanges as well as NDS-OM. So in prelims that asked about this only. What has got changed now? Now after 2021 retail direct platform, can you see there and this side? क्या हुआ है? Everything is same. Can you see everything is same? Which means whatever option retail investors used to enjoy before, the same option is still there. But in addition to this option, we have introduced another option. What is that another option now? You can see that. Now RBI will sell the government security in the primary market on the retail direct platform. On the retail direct platform, it will be bought by retail investors directly from the RBI in the primary market. Can you find the difference here? यहाँ पे क्या है? Indirectly, and यहाँ पे क्या है? Directly. So what would the retail investors now prefer? Directly. Why? Because here they could have been required to pay the commission. Now यहाँ पे there is no commission on that. So now the trading of government securities where they can do. stock exchanges as well as NDSOM, which was like before only, but in addition, they can also do a trading on retail direct platform. Retail direct platform is not just for primary issuance, it is also for secondary market. Is this part clear, everyone? Okay. Okay. Just 5 more minutes. Okay. Let's solve 1, 2, 3, 4 questions and then we'll wind it off. As a debt manager to the government, which among the following functions are carried out by the RBI as a debt manager? As a debt manager, RBI will manage the market borrowings, correct? RBI will provide ways and means advances, correct? RBI will authorize the primary dealers, correct? RBI will not fix a limit on market borrowings because that limit on market borrowings is fixed under the FRBM Act. So right answer is 1, 3 and 4. What about this question? 36. We'll come to 35 later. Look at the 36 question. Consider following statements. The public debt of the government is insulated from interest rate volatility. Why? Bond yields. Okay. The public debt in India is primarily contracted at fixed interest rates with lower share of floating rate debt. Okay, what is this question? Sabse pehle, you have government securities. You know, government securities are of two types: floating rate government securities and fixed rate government security. Fixed rate government security means the coupon rate remains fixed. Floating rate government security means the coupon rate keeps on changing. Right now, government borrows money both through fixed rate government securities as well as floating rate government securities, but majority of the government borrowings is through fixed rate government securities. So when you read the second statement, the public debt in India is primarily contracted at fixed interest rate with lower share of floating rate bonds. Is it correct? Correct. But does it get insulated from interest rate volatility? It does not get insulated because what actually happens is some of the public debt is also through floating rate. That is reason number 1. Second, whenever interest rate at a global level increases, what happens to the yield rates in India? Yield rates in India will also increase or decrease. You must understand we are living in a globalized world. There is nothing like insulation. It is always getting affected. That is why, you know, RBI is taking some steps to reduce the yield rate on government securities. Which steps the RBI takes to reduce the yield rates? You have schemes such as Operation Twist, GSAP, right? That is what RBI does. So obviously, this is incorrect. Is this clear? Okay. Look at this question. Consider the following. How many of the above are included in central government debt? When I'm saying debt, I hope you are able to remember the budget wala jo PPT tha, right? When I'm saying debt, obviously public debt will be included. Liabilities under public account of India is included. What about this extra budgetary resources? Like government issues some special government securities. Like government issues special government securities such as oil bonds, Uday bonds. Does it add up to the government debt? Special government securities. They are considered to be off budget financing, which means they are not part of fiscal deficit of the government, but they become part of government's liabilities or part of government's debt. Understand that. Getting this? So they are not part of fiscal deficit, but they become part of what? Debt. So this is correct. So right answer is in this case all three. Okay. Last question. With respect to special government securities, consider the following statements. The money raised through bonds, in this case bonds means special government securities, is included in the central government debt. I just now said that. It is included in central government debt. The money raised through these bonds is included in the fiscal deficit of the government. It is not included in fiscal deficit. That is why what is it called as off budget financing. These special government securities are eligible as SLR securities. In SLR, we don't include the special government securities. In SLR, we'll include dated securities, SDLs, cash management bills, as well as T-bills. Now there's a new addition to that. SLR securities. Yes. What do you think is the new addition to SLR securities? Yes. Sovereign green bonds are now eligible as SLR securities. Don't you think the bank should be encouraged to invest in sovereign green bonds? How do you encourage the banks to invest in sovereign green bonds? By making sovereign green bonds as part of SLR security. So that will cover in tomorrow's class. Is that clear? Okay. So that way, if you see, these special government securities are eligible as SLR securities. It is actually incorrect. So right answer in this case is only 1. Okay. So in case any of you have any doubts in the class, you can start asking me the doubts now. Yeah, one by one. Agency banks means they carry out the banking related functions of the RBI. Like RBI has to accept payment, or when you're living, please, bina baat kiye. Okay, when I'm saying that RBI is acting like a banker to the government, it means RBI is required to accept payment or make payment on behalf of the government. Generally, that accepting payment or making payment, RBI has delegated that responsibility to other banks. Those other banks which accept or make payment on behalf of the RBI are called as agency banks. Clear? Yeah. Come again? No, it's they're issued by the government on behalf of the, government issues them. Like in tomorrow's class, we will be covering them in detail. You can see we have special government securities like oil bonds, recap bonds, fertilizer bonds. Okay? Next.
Minimum reserve system.
Come again?
The minimum reserve system of RBI. Can you explain briefly?
Entire minimum reserve system. This is something I take for 1 hour in the class, foundation class. ठीक है?